Dave, if we haven't proven that we can manage $1 trillion in debt efficiently, I think it raises fair questions about how well we can deploy another $25 billion. This isn't free money, it's risk, and it's public risk.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm a Level 2 mortgage agent. I'm joined by David Warren, Level 2 mortgage agent and owner at Referral Mortgages. And we're here to bring you the latest and greatest. We want to give a quick shout out to our amazing sponsors and to you, our listeners. David, how are you doing? How's the week?
I'm doing well. We're recording a little later on Tuesday, the 28th. But, the weekend, the past couple of days have been nice. Certainly no complaints. On that front. How about yourself?
Yeah, we're a little more lively. I'd say most days that we're starting to record, we're working on our first coffee and the brains are getting up and running. But, we've had a few hours now, Dave, many coffees, many conversations. And here we are. This week has been very interesting. But before we get into real estate, I know something that's close to your heart, my favorite charitable event of the year. What's coming up, Dave? What's happening in May? Tell me about it.
Yeah, every year I bring it up. I'm going into my 14th or 15th year organizing this event called Martini Madness in support of Crohn's and colitis research. So it's taking place next Thursday, May 7th at Lago Bar and Grill at Dow's Lake. Tickets are available at martini-madness.ca. It's a great event. We get about 350, 400 people out. They sends ownership group, number of the NHL players, sends some from other teams, number of the business community and the like. It's really a night of martini sampling, live art show, live and silent auction, dinner stations. This year we got a magician coming out. We got a band. We got a DJ. We got it popping. Get your tickets, martini-madness.ca, and hope to see you out. If there's anyone that is looking for a great event to even host clients at, we do have 10-pack tickets available as well on the site. That is definitely a great way to go about kind of entertaining a bigger group if you've got staff or you've got clients you want to bring. It's certainly the go-to event of the year.
Magician.
That's my plug.
I like it.
A magician.
A
we got a magician. That's my addition. I love him. Oh,
gosh, I can't wait. I hope it's you. I hope Dave's just walking around juggling.
It'll be a freaking disaster.
Man, that's great. I'll definitely be there. Anyone who listens, who wants to join Dave and I, it'll be a fun night. And I, like you said, you've been on the board for many years. It's always kind of a marquee event on our calendars, and it's always a really good time. Good conversations, good connections, and great cause.
Well, martinis and a couple martinis to loosen you up.
Couple martinis. Conversations always get a little looser, after the first hour. So, Dave, big news came out Monday morning, and kind of hit the real estate world by storm. Nobody knew it was coming. Some people, select few, knew it was coming. The majority of people did not know this was happening. Real, which is a very kind of AI-driven online brokerage, lighter weight brokerage, cloud-based, thank you, has announced plans to acquire ReMax, the ReMax, like the most recognizable brand on the planet, for $880 million. Now, there's still a lot that needs to happen before this acquisition actually transpires. But the combined company would create kind of one of the largest global real estate platforms. Real is, as you mentioned, a cloud-based tech-first brokerage with lower overhead. And ReMax is kind of that legacy franchise model with massive global agent count, brand recognition, et cetera. So the ownership, from my understanding, would shift to Real, with ReMax shareholders owning a minority stake. And the deal reflects kind of a broader trend of consolidation of tech-driven disruption in real estate. And I think, I've been kind of beating the drum for years about AI kind of, creeping into real estate space. Not that this is necessarily a takeover, but it certainly, to me, shows evidence of a shift from kind of that legacy franchise model into more of a cloud-based tech-first brokerage. So when this came out, what are you kind of hearing in the streets from the people you've been talking to? And how do you see this playing out over the next, say, 6 to 12 months?
Well, I think the interesting part was as soon as it was announced, I looked at both share prices. Both companies are publicly traded. Real Brokerage, their stocks were down 24%, while as ReMax was up 25%. So clearly, real shareholders did not like the purchase, the initial news, and but ReMax shareholders did. So that was very interesting on a right out of the gate. I think the taking a legacy kind of older school mentality driven real estate brokerage and kind of bring it into the modern day and age of Real Brokerage competes with EXP, which is another one of the largest cloud-based networks out there. I think it will kind of catapult ReMax into that newer age on the back end and for their agents, new tools and things like that. I know you and I were chatting with a number of agents on both sides. I think more so on the ReMax side, where they had town hall meetings and things like that yesterday with their broker, just to let them know that nothing's really changing, and kind of use analogies of Volkswagen owning Porsche and things like that, where it's just a different division, obviously, and nothing's going to change for them. Obviously, that's the here and now. You don't obviously go through an acquisition like this or a merger without finding cost savings in kind of in synergies, so operational synergies between them. And I think on the outset, it's like 30 million a year they were projecting as far as synergies are concerned, and that'll only grow. I think it's about 180,000 real estate agents. So they'll have to work through providing value. I mean, really, real estate agents are not tied contractually to a brokerage. They can come and go as they please. And so, really it'll be on that new entity to express why an agent should stay with them. But, that'll be as things roll out. Like you said, I don't think it's supposed to finalize until later in the year anyways.
Yeah, I mean, going to speak to the stock price originally, I think because of the agreed upon acquisition, the ReMax shares, I think, were agreed to be bought at just under $14 a share, and the stock itself was trading at $7 or $8 yesterday. So I think that was kind of the thinking of oh, we're getting a guaranteed price of $13.80. If they acquire them, let's load up on shares now. Hence why I beat up. And I think the other side, for Real going down, I think the question was did they overpay for this? Why are they paying $13.80 a share if it's only valued at $8? So I think there was kind of that, for the general, for retail investors, kind of what is happening and why where's the money actually going to go? Who's going to benefit from this? The agents I spoke to, similar to yourself, some of them were the same agents. So similar kind of sentiment of this isn't going to change anything. I mean, we see it on the mortgage side of things that, every brokerage offers different incentives or different support or different, tools and resources and et cetera, et cetera. So from a day-to-day operations, I would say most agents are not going to see any sort of disruption in the short term, right? Especially until this acquisition actually happens. Now, once the acquisition happens, I mean, things can change. But as you said, if the agents don't like it, then there's going to be another opportunity or another option right down the street, literally, So, I mean, I had agents that I spoke to yesterday that were not happy about it, and they purposely didn't go to Real because they didn't like the fact that it was cloud-based and tech-focused, and they wanted more of that kind of old-school boutique-y style brokerage. And that's specifically why they went to ReMax, because they wanted that. So I think you're going to get mixed emotions on both sides, mixed opinions, I should say, and emotions, based on, their own reasons for being with Real or with ReMax to start with. And, it's going to be a moving target. Things are going to change depending on who the leadership is or where that lies or who's the decision maker. That could obviously directly influence a lot of agents globally and obviously here in Canada. So yeah, it's interesting. I don't know where it's going to go, but I think more than anything, I think it kind of shows that there will be moving forward, as we've seen with, I think Rogers announced this week that they're cutting potentially 50% of their staff. Rogers, a monopoly telecommunication company in Canada, is talking about cutting 50%, 50 of their staff. That is wild. Meta last week laid off a bunch of people. This is going to continuously happen in large organizations. And the ones that don't have to lay people off are going to amalgamate, or they're going to have to find ways to save on the bottom line because things are going to get more automated. They're not going to need as many bodies in those kind of administrative roles. And what does that do to the industry? I don't know. How does that change things? I don't know. I don't have a crystal ball, but I think we will see more of this sort of thing in the coming years than we have maybe over the last decade.
I think the Real acquisition merger was also precipitated by a move in the US that some might have heard of. I'm sure those that are realtors listening, knew about. But in January, Compass Real Estate acquired Anywhere Real Estate. I know that doesn't really mean much for us here, but Compass, they acquired Century 21, Coldwell Banker, Sotheby's International, and which was their parent company was Anywhere Real Estate, and that was in January of this year in a $1.6 billion all stock deal. So making like kind of a mega brand with 340,000 agents. So, the largest real estate residential real estate brokerage. So I think to your point, I think, they're having to brands in different areas of industry, especially, in real estate with that Compass transaction in January, I think is kind of what possibly pushed ReMax and Real to this merger so that they could kind of stay in front of what Compass is doing, because they're very tech focused and have, that, a lot of that cloud based and things like that moving forward, and kind of create those operational synergies that I think are going to be important, and to every company is going to be important, of finding synergies, and whether that be through AI or through amalgamation of companies that, it'll be interesting to see as every industry evolves. There's always other companies that merge or acquire. This is just obviously one big brand, and I know that kind of a lot of people online were saying like that they would have thought ReMax would be acquiring Real.
Yeah.
It really being the other way around, that them being focused and probably having better bottom line as far as like
Well, that's
reduced
it. Yeah.
operational costs, that they have the funding behind them to actually be able to provide the capital to acquire ReMax.
Yeah, and even speaking in our own industry on the mortgage side, we have lenders that have they kind of have joint underwriting teams across different lenders that kind of manage that, they've kind of cut their workforce in the sense that they have the same underwriters underwriting for multiple lenders at a national level. But also lenders now, we talked about this probably 2 years ago, but there's a company called Savvy that was top 100 tech companies in Canada, top 100 businesses in Canada last year. And Savvy is basically an AI underwriting software that was created for lenders to basically input all their lender criteria and to help kind of expedite document review, criteria review, qualifying for applicants that are submitted to them, and not necessarily just with brokering. This is just banks that were using this, and that is just to me like a sign of what is to come. Now, not to say that we're going to be obsolete. Like, I think general people want to talk to a human being. Like, everyone I've talked to, they don't want to go online and click a button and get a mortgage. They want to talk to Dave or Paul and explain their situation and feel like they're getting an actual tailored response, not some static automation that comes back. Like, it's dehumanizes the whole experience. And when you're talking about hundreds of thousands or millions of dollars that you're borrowing, like, you want to speak to a human. There needs to be a human element to it. Now, do I think that AI is going to change the world? It will in many ways, but I think it's more of the administration side of things, the actual automation of exactly that, like making sure the documents aren't fraudulent, making sure that it coincides with their actual CRA profile, underwriting the lender criteria so that they're not missing a step in the process or something in the application that a human error could make. Things like that I think will be automated. But I think the experience of buying a home for the time being, until there's a massive catalyst, like 99% of the population is going to want to talk to a human being or deal with a human being when they're buying a house. It's the biggest transaction you're ever going to make in most cases, unless you're acquiring a business, unless you're real, but it's going to be one of the biggest transactions you make. And you want someone to be accountable. You want someone that you can reach out to if you have questions. Like, that is for the time being where I think things go. I think the administration gets automated, and I think the human element still exists. And I think that's in any industry. I think that is going to be the case. Like, you're going to have that human element of people, like client-facing people that need to have a human conversation and a humanized interaction. And then you're going to have the back end, which is going to be basically automated. Like, anything that is, gathering information and putting it together into a simple format is going to be automated. That's how I see it rolling out in the coming 2 or 3 years. Now, for Real and ReMax, it'll be interesting to see how that happens, because we know, realtors, half of their role is finding the homes and, helping their clients and assisting them and showing them properties and so on. And the other half is writing the contracts and making sure they have the proper conditions in place and so on. So how how can you automate that efficiently so that the client's experience is actually amplified and isn't worsened through that tech, and through that innovation?
$880 million question.
Yeah. Yeah.
We will find out.
Even the best photographer can't hide drywall dust and paint splatter. And every day you delay listing could mean missing peak spring pricing in Ottawa. A to Z Cleaning Expert gets your property truly photo ready. Don't risk going to market half ready. Mention TowRep at atozcleaningexpert.com to receive priority scheduling for your next listing. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
Speaking of millions of dollars and billions in this case, Canada this week, Prime Minister Mark Carney announced that Canada's first national sovereign wealth fund is going to be created. So Canada's launching its first sovereign-style wealth fund, and it's called the Canada Strong Fund. So the initial size is going to be $25 billion. And they are going to give people the opportunity to contribute their own money into this fund. So that's kind of the seed money is $25 billion. The focus is going to be investing in major Canadian projects, so energy, infrastructure, mining, tech, etc. The goal here is to drive economic growth and reduce reliance on the U.S. economy. What do you think about that, Dave? I'll let you lead off.
What do I think about it? I mean, first and foremost, it's being funded by debt. The only countries in the world that have a sovereign fund are countries like Norway, like the UAE, like Saudi, that have a surplus as a result of their oil and gas industry and managing their budget and having a mass surplus. And then they've created a sovereign wealth fund that they then invest around the world. They invest nationally to grow their country as well as to grow this fund for their people. In this case, it's taking that idea without having the surplus and running it on the country's credit card. I think it's kind of outrageous to be proposing this when we've got the largest deficit in history by double coming out and our national debt being at 1.2 trillion. So I don't know what the objective of is it or and how they're even really asking the general public to invest in it when to debt service that $25 billion is already coming from the public's taxes. We're already paying for that debt. So how are they asking individuals to go and invest? And they weren't even able to answer the question yesterday when asked by the media of what the rate of return would be. They couldn't answer that or what they were investing in. So it is a very confusing thing to announce, and I really don't get where this is planned to go and what it's actually planned to accomplish.
Yeah, I would completely agree. I think the thing that's most confusing to me is from just a strictly investing standpoint, this is essentially using 100% margin to invest. Like they're borrowing $25 billion, which they have to pay interest on, as you mentioned, to hopefully get a return that outperforms the interest they're paying. So if it's $25 billion, they're paying it might be interest free. It's our own government, but let's assume it's 4%, right? Let's just use a mortgage rate. They have to outperform that. And they're not suggesting by doing this that they're investing in a blue chip equity or a bond or a GIC. Like they're openly saying they're going to borrow this money. They're going to invest it into Canadian businesses or at least infrastructure. But think of a portfolio manager. If they have already run $1 trillion in deficit in debt in margin to invest in your own business, being Canada. Canada is the business in this analogy. What is an extra 25 billion going to do? You're throwing a drop into a bucket, like you're $1 trillion underwater right now as a company, and you want to get 25 billion more to essentially gamble to try to win some of that money back. To me, I just, from a macro level, forget anything about it being political, like just strictly from an investment standpoint, you're already down $1 trillion on your investment into our country, right? From our own, like, we're paying for this as citizens. It's our $1 trillion that is being used for this. And now they're going to add another 25 billion on top of that, which is going to be even more high risk. So that first trillion was supposed to be invested into our healthcare, our infrastructure, our building the oil pipeline, like all of these things that would enrich Canadians. But that hasn't happened. Like, think of the Build Canada Homes program, which I think was $1 billion at the time, which was supposed to, just solve all of our supply issues and affordability issues. And we were going to create all these homes, and Canada was going to be just a surplus of additional homes, and everyone's going to be able to afford homes now. They've built 9 homes. They've been asked, who's going to manage this fund? They didn't have answers. What's the expected return? They didn't have answers. So, like, what is this? It's just, to me, it's just a talking point. It's just something to basically say, look how much we're investing back into Canada. Well, there has to be results, like actual results that Canadians feel, that we can see, like shovels in the ground, pipelines being built. To your point, like, we have one of the most sought after resources on the planet, like the cleanest of all of it in the world, and we're not utilizing it. Like, we could be the richest country in the G7, and we're not. So to already be $1 trillion in debt and to add 25 billion on top of that into a higher risk investment, to sell it as beneficial for Canadians and it's really going to help us long term. Like, when can Canadians expect to see a return on that 25 billion? Honestly, like, how long would it take, even if you're the best portfolio manager on the planet, to get 25 billion to actually have a meaningful return for Canadians, like at the grassroots level? It's going to take decades, like maybe longer than that. So Dave, in your opinion, like, what sort of projects do you see them using this money? I understand they're talking about infrastructure and energy and so on, but like, where do you actually see this money being allocated, and how could you see this benefiting Canadians, like Canadians on the street, people that live in Ottawa, people that go to work every day? They're making ends meet. How can we see this benefit the average Canadian in the next, say, 10 years with this fund, in the most favorable of cases?
So I don't believe that the intent of it is going to be energy. Currently, there's no focus on energy of natural gas exploration and pipeline and export, or of oil exploration and pipeline and export, which would put us in the G7, be one of the strongest. Right now, I think the plan and the timing of it is interesting, and I think it's solely in the announcement of deleveraging from the US. I think the whole focus is that over a year has gone by with no reduction in tariffs, no start of negotiation for CUSMA, which we spoke about 2 weeks ago, which is coming up in July. And I think this timing is to say, and to detract from, like, hey, things are not going well with the US, so we're going to say that we're going to create this fund to detract from that. Because right now we're doing about, I think, like, in merchandise trade with the US from a GDP perspective is about $100 billion a year that we're trading with the US in 2024. And that's only going up, and that's just in, like, the merchandise trade surplus. I think this is kind of a detraction from that. I think there's so many holes in it. I don't know what the objective is going to be, but I mean, really kind of just following along with what has been policy so far. It's not going to be in, like I said, in natural resources, and where that would help reduce our overall debt and would actually give a rate of return. While you were kind of talking, I looked up what the average interest rate is that's paid by countries on their debt. And last year, in 2025, the US federal debt was 3.36% was what it was paying. And in Canada, we paid in 2024, 2025, the federal and provincial governments spent $92.5 billion on interest payments. So, really.
So this isn't even a quarter of interest payments. when you think about it
I
holistically?
think it's very confusing, and I think that if my concern is really, again, circling back to Kuzma and the tariffs and all of that, is like, is this a detraction or tried to be positioned as an investment in Canada, that we don't need to rely on the US because we're not going to have a trade deal, which is just going to drastically impact the automotive, the forestry, and the agricultural sector immensely, because they trade so much with the US, and is the intent going to be to basically use this 25 billion in the short term to invest in these sectors that are about to be hit heavily by like a lack of a free trade agreement.
Yeah, and let's be honest, like
Which just really
billion,
which really affects like our entire like economy, and like really plummets us into recession. Like right now, the ex Bank of Canada chief Stephen Ploutz is already pegging us as of last week at a 30% chance of falling into a recession. Driven by like energy shock and trade tensions. And that we're on like already on a fragile economy because of it. So it's this kind of thing is very. I know it's brand new and it was only announced yesterday, and not a lot of answers, even by reporters asking. There weren't very many answers as far as, like you said, who's managing it, what that rate of return is, what they're looking for from the public, what they're going to invest in, all of that. I think it's problematic from a conflict of interest perspective for anyone, like whoever's going to manage it. And like you said, the history of us being able to even greenlight projects or even fulfill those projects, like, you're looking for the public to invest in it, which we already are in a sense with this debt, but to invest even more.
Like, what do you mean? Like, we're already, it's already all our money anyways. Like, it's already our money. We've already invested the 25 billion. And I guess what I'm thinking is, like, if you pulled 100 Canadians, again, I'll use that number 100, probably 95% of them would not invest in any sort of risky investment. Like, they're looking at GICs, they're looking at blue chip stocks, they're looking at mutual funds, those sorts of investments, like money market funds. Like, they're not looking at investing into high risk, like not guaranteed returns. And that's exactly what this is. So, at a minimum, I would ask, if this fund actually happens, show us, like, have it as a live fund. Like, I want to see a line item of 25 billion. And then here's 10 billion that went to this project. Great. Let me follow that project. Let's see what the return on investment is for that project. And let's see how this actually turns out. Like, make it fully transparent so that every Canadian can see exactly where our money's going, exactly what the return is, and show us the return on the investment so that it makes sense. And great, if 25 billion can turn into 50, well, let's put 50 into it next time. We can maybe get that to 100 if you can show that it actually makes sense. Again, I'm thinking about this from a corporate company standpoint, and I try to remove everything else. Like, if a company is 1 trillion in debt, they're bankrupt. Like, they're not continuing in business. You know what I mean?
Mm-hmm.
So that's where we are as a country. Like, we're 1 trillion in debt. So over 1 trillion. Is this the right solution? I guess time will tell. But I guess, as I said, as a Canadian citizen, I would ask, at a minimum, that it's transparent how this is invested, exactly what projects it's going into, and what that return looks like. And more importantly, like, who's managing it? What's the expected return? Like, simple questions that I think should have been thought out prior to announcing this, because those are the most obvious questions. Okay, who's going to manage this 25 billion? Is it just going to be more bureaucracy and more levels that they have to go through to get access to this money to invest in a project? Because that's typically what happens. It's, money is allocated. There's more bureaucracy, more jobs created to manage the money, and then the money is never actually distributed because it's allocated to the employment, not the actual sectors. So we'll see. We'll see, Dave. I'll stay optimistic, but you can probably tell by my tone, not overly impressed with the announcement.
Well, should we boost the mood?
Okay, here we go, Dave. We got 3 mood boosts today, Dave. Number 1, riding a stationary bike will get you nowhere. That's it. That's the whole joke. Number two, why are peppers the best at archery? Because they have an arrow.
Mm-hmm.
At all times. And number 3, I used to run a dating service for chickens, but I was struggling to make hens meet.
Mm-hmm.
Yeah, struggling to make hens meet. Thank you, everyone, for tuning in. And you know what? Leave a comment and tell us your thoughts. Like, how do you feel about this new Canada Wealth Fund? And how do you feel about the Real buying ReMax? I know we have a lot of realtors that listen to the show, a lot of mortgage agents that listen to the show. If you're on either side, either Real or ReMax, leave us a note. How do you feel about this? We're interested to hear. And thank you, David, for being here. Thank you for showing up. Thank you to all our listeners, and thank you to our amazing sponsors. We'll be back next week at 10 a.m. Until then, have a great week.
Deuces.